This is Bob Anderson, and I want to talk about the last couple of days of price action. Okay, and then I want to and I want to talk about tomorrow's price action. Okay, and so this is kind of important in my opinion. I've talked about this. I've talked the two things I'm going to talk about today. I've talked about before, but if I talk about them enough, you might start paying attention. So let's talk about one of them. One of them is price action being around the overnight open. This overnight open, what I did is I blew it up to make it bigger. It's real simple on your chart. Just go into indicator, go into current day high, open day high, low, open up that one. I change it to 5. It's set in your settings as 2. Well, I barely see the damn thing. Of course, I'm blind as a bat. So I change it to 5, 6, whatever you want to change it to, but make it so that you can see it. Here it is. That's your overnight open. If price action, when the market opens and whatnot, is hanging out around that overnight open, you really need to be cautious about letting any of the trades that even signal. You need to be cautious about taking them. Now, for example, like right here is the NQ. When price came pushing away and then rolled up into this 5-minute red line, that's okay. That's okay, because that's hopefully a move to start running away from the overnight open. But when it comes up here and starts crossing around and crossing around and crossing around and doing all that stuff, that's it. Yeah, because you're in equilibrium. The market has not picked a direction, the direction being long or being short. You're in equilibrium. You're at the price point where price actually opened. So is it going to be an up day or is it going to be a down day? The market hasn't decided. So why do you want to partake when it hasn't even decided where it's going to go? So when you see price banding around that overnight open, you need to stay out of the trade. Now, I'm creating an indicator on how to trade the overnight open, but that trade is stronger than any of these moving average trades. And that's part of the reason why your moving average trades are not going to work. It's because you may be fighting yourself into the overnight open. And remember, the one thing I can do to protect you is I don't let any setups that run into the overnight open actually take unless the targets are within reach before you get to the overnight open. But I mean, other than that, there's not much I can do other than to tell you don't trade around the overnight open. So let's look. I think this is today in the NQ. So let's just kind of look at, see how it just, this is all morning. Now, it wasn't triggering any trades, but it was, I believe, in oils. We'll look at that in a bit. But anyway, so boom, boom, boom. Then all of a sudden, you start going, this blue line starts getting pushed. It starts getting pushed to new highs. Okay, that's a good sign. You either start pushing it down or you start pushing it up. Once you start pushing those blue lines, either up or down, it's a sign that you might be leaving the overnight open. So we start pushing, we start pushing, we start pushing. Nothing sets up per our settings, and then all of a sudden, boom! It pushed to the overnight high. Pulled back, candles too big, candle consolidated, bam, bam, $750. Now here's the interesting part. Okay, that's the only trade setup in. That's the first trade setup of the whole day in the NQ. And it happened at 1:39 Eastern Standard Time. So all these potential false setups that could have happened in here, you should have just been ignoring it. You should have been looking for new rotations through the top of that band away from the overnight open to the top side, or new rotations to the south side doing the same thing. And even at that, then you need those setups to be, crisp and clean, because that piercing is a sign that price wants to go that way. But, again, it doesn't mean it's going to. But in this case, it went to the overnight high. So the high of the last, since 6 o'clock Eastern Standard Time the day before. So like at least 12 hours, something like that. So boom, over 12 hours, like 12 plus, it's like 17 hours, the high for the last 17 hours. And then up, down, boom. Now, I'm going to show you something really interesting, just as a side note. Then it did a 5-minute red line and it failed. So those are the 2 trades of the day, which, by the way, both of them were valid setups based on what I would have looked for. Now, it just happens to be that both these setups worked. This one didn't work, but that were triggered when they were away from this consolidation zone of the overnight open. There's consolidation zones, period, that you need to stay away from, but you really need to stay away from consolidation zones around the overnight open. Market has not picked a direction. Hell, and in this case, it didn't even pick a direction until after 1 o'clock. Okay? So if you're sitting here in the middle of the day and you're rotating around the overnight open, and you don't want to sit there and do that, shut the damn thing off. Go do something else. Don't give your money away on stupid stuff that sets up in that area. That is a bad area to trade in unless you're trading the overnight open. And even at that, it has rules to keep you out of these types of trades. Okay? So this ended up going to the overnight high, rotating down, boom, $750, rotated up. Now, let me show you something interesting, okay? Some of you might have been like, well, how come it didn't take this trade here, which was another beauty of a trade? I get that. But we have settings as to how it rotates up and pulls back and rotates up and pulls back, and it's looking for gaps. And the gaps create the next touch. So let me break this apart to give you a little sight on something, and then I'm going to show you something really cool. All right, so right here, this push-up, this crossover of price and this push-up gave a 28.7 tick gap between the bottom of that candle and the top of the gold line, which was over our amount that we have as our setting, which is 5 ticks. I'm going to talk about that in a second. And then a pullback, and then this candle was black for a reason, because the candle's too large for you to take a break. This one consolidated, bam, rotated up, break even here with this candle, boom, target, done. Okay? But in the process, it had a gap here of 10.8 from the bottom of this red candle to this gold line. And when price came down and touched again, it created a T2. Now watch this. I'm going to show you something. All right. So let me go back into the strategy. Let me go back into the settings. And these are part of the variables that are going to be routinely tested to see if they need to be changed. So here's an example. This is the 1 minute gold line. The reason it's a 5 is because what we have found is on the crossovers, sometimes we get a rotation back to the gold line after piercing a 60-minute high, and a rotation back, and the gap is only like 6 ticks from the bottom of the highest candle to the gold line. And you don't want to miss those trades. Okay, so you got to keep the number low. So just to give you an idea, so here's the number right here, the gap counter, the test counter. If this was set at 11, which is 6 ticks higher, then your test counter would have skipped that number 2 and let's just see what would have happened. This is how tight some of these settings are, and can be frustrating sometimes. But it doesn't mean there's a freaking bug in the system. There's a reason it is what it is. So let's just do this. All right. Watch this. Remember, I changed it just from 5 to 11. Now all of a sudden, this does not become a touch 2 anymore. This hits 750. This rolls down as a perfect trade. And that hit another 750. I mean, that's minuscule of a change in the setting. But keep this in mind. That setting was at 11 because at 5, because the recent testing showed that we were getting certain situations where this crossover was breaking these 60-minute highs and rotating back into the 1-minute gold line, kind of like almost happened right here. It didn't. And the gap on the candle was only just over 5 ticks. And then it would come back, you'd hit your entry, and boom, you were gone for $750. So you didn't want your setting to be 11 ticks because that would have eliminated that trade. So that's part of having to continue to test how the market is rotating and changing its personality along with its targets. Okay. As you can kind of see, this second one kind of really tipped out right there at that target. But we didn't get that because our settings are at 5. They're not at 11. So because of 5, this gap right here was like, what was that number? I think it was, hold on here. Let me go back in. Well, I'll put it back just for a second. I want to get to the second part here of this video. Sorry. I'm sorry that I kind of little all over the board. But I mean, the more I show you these things, the more you're going to kind of understand why it's taking this trade, why it's not taking this trade. Even though the trade may have been a good trade, it's the way the counter is working sometimes, and it's got to look at a consortium of deals, not just one, a consortium of transactions. Oh yeah, this was 10.8. It says it right there, 10.8. So 10.8, which is more than double the setting right now. And so to make that not count that touch 2, okay, I'd have to take that setting and more than double it. And what that has shown me recently when these settings were done is that actually cost us money because we were losing trades on rotations up across the gold line through that 60-minute high back to the gold line and then gone. And most of those would have been T1s. And T1s are T1s, which this is a T1. T1s tend to be the better trades than the T2s. So anyways, that's just the simplicity of how the settings, that's what makes this one a T3. Okay, now we know after the fact the darn thing worked. Okay, I mean, I'm not a fan. I don't know how many times I have to say it in these videos. I'm not a fan of T3s anyways. So I'm not so sure, but I mean, we know after the fact it worked. This T1 was really the bread and butter trade. This one right here that we did get. Okay. Then we had a 5-minute gold line, 5-minute red line later on in the day that hit and then got knocked out. So anyways, of course, the damn thing worked. Of course, the damn thing worked. But again, you have to pick a setting. And back testing showed that if I had my settings, beyond, say, here to here, so that we would have stayed in the trade longer, that the likelihood of that causing us more money in the long run from losses was greater than the reward we would have gotten from this trade actually working. Okay? Anyway, so consolidation around the overnight open. just don't look at it anymore. Wait for it to break out of that. Wait for it. Like this broke out of this zone, came up. That was a potential right there for a 5-minute red line short. Absolutely. But it blew right on through it, so it didn't happen. Okay. But when all this stuff's going on in here, if you started getting colors and it telling you that there's trades in there ain't no trades in there, folks. There is no trades in there. Okay. Let me see. Was there anything else I wanted to talk about with the NQ? I got to get moving on this video here. Let me see here. Yesterday, yeah, there was only one trade in the NQ, and it was a break even. So and see the same thing. Here we are. Same thing. Yesterday, just hanging out around the overnight open. Hanging out around the overnight open. The only trade that even possibly happened fortunately, ended up getting knocked out at break even. Fortunately, got knocked out at break even. Okay? That was fortunate. I mean, the reality of it is you're looking at a cluster right here, all around the overnight open, and it didn't finally, again, break out until here. And then this was a T3. This probably would have been a 1-minute gold line trade with our settings if it was not a T3. Yeah, this probably, and it worked. Ironically, that's the same setup as today in general. It broke north of all this consolidation throughout the whole day until 1 o'clock in the afternoon, came back into our 1-minute gold line, and then wham. So have you seen this movie before? This was the movie. The only difference is this, by the time this happened, it was a T3 on our counter. So it didn't take it. Anyways, so have you seen this movie before? So let's talk about oil. I want to do that quick. Let me get oil over here for just a second, because I want to talk about another thing in particular about when you don't take trades. Okay, let's talk about that. When you don't take trades. All right. So let's go to yesterday, October 30th. Okay. Now, I am working with the coder because one of our subscribers came up with a great idea. See, sometimes you guys help me see through my own fogginess. One of my subscribers said, why don't we have a setting in the system that does the measurements that Bob's talking about? So let's go over here. I want to show you the measurement I'm talking about. And I'm actually working on doing this right now. And I hope to release something with this definitely within a week. Okay. But so here's our overnight open again. So overnight open yesterday, which was the 30th, was $85. Price ran away from there. And I mean, we're down below 83. So we're $2 away from the overnight open. So what does that mean? I talked about this in one of my other recent videos. We are now way below the overnight open, which means we should be significantly biased to the short side, because anything to the long side is going to be taking trades into slower moving averages, which are stronger than even our moving averages that we're taking trades off of. So we don't want to do that. So here's my point. Here's our settings. What do our settings say? Well, our settings have us taking these trades. But if you listen to what I said, you wouldn't be taking this trade. You wouldn't take this long here. So you wouldn't have taken that, because you're taking a long back into slower moving averages, because we are so far from the overnight open. We are $2 away. $2. Okay. So this trade right here is one that we should have ignored. How do you ignore it? Well, you just say longs off. That's the way it is right now. If you're so far away. Okay. And then all you're looking for is that trade I talked about, which is the crossover pullback into this, and then wham. And this was, I mean, I was sitting here with bated breath myself, waiting for this exact movement to go right up into here. And then bam, I was gonna hit that like a rented mule. But the problem is so apparently the whole market was thinking the same thing as me, because they jumped on that pig before it even had a chance. And look at what they did. I mean, they ran this thing even from here to here over 80 cents, which is a huge move. 80 cents, 2 contracts, $1,600. So I was looking for that push right into there, and I was going to take that short. I personally did not allow any longs to be taken. But when I turned the system off and turned it back on, this is what you see. You see that this long would have been taken. That's a loss. This long would have been taken. That's a loss. These are longs that the system had set up that you never should have taken. Now, what am I doing? I'm getting an additional thing put in the strategy so that I can back test each one of these indicators when we are quote unquote significantly away. What does that mean? In each instrument, what is that significant level to turn off the system from rotation trades back towards the overnight open? Okay, to help us avoid even the system telling us about these trades. Okay, I personally don't do these trades because of just the reason I talked about. You got the 10-minute moving average coming behind you. You got the 15-minute moving average kind of coming behind you. And you're trading right into them. You don't want to do that. What you want exactly this. You want this to run its head into it and get pushed down and then rotate up into your 5-minute moving average, and then bam, there's your money. Okay? So the way to do that is to turn off, because see this because it's even doing that, it hit your loss limit, which is 2 losses, even though you didn't hit it. Of course, if you had this thing shut off, it wouldn't be counting them. But I mean, but it shuts off and doesn't even take this trade because it's already had its losses. So what I'm going to do is I'm going to get that setting, and I'm going to give you guys the ability to turn it on and off. And I'm going to use it for back testing to make sure, like on the NQ, if we're 300 ticks or whatever the heck that magic number is with the NQ, if we're X number of ticks away to the long side, then it doesn't allow that rotation down inside the red line, push back up, and then rotation down. It doesn't allow that trade to trigger. Instead, it'll have you waiting for it to go down, bump its head on those longer term moving averages, rotate back up over that 5-minute red line, come back down, hit that 5-minute red line, wham, because that's the trade that you need to be taking. You don't need to be taking the red line short into headwinds. So I'm going to use it to calculate settings backwards for each one of these instruments. Okay. And so again, back to quality, not quantity, because what we want to do is we want to eliminate this chart even showing this stuff that you shouldn't be taking. Okay. I haven't come up with a solution to how to do that around the overnight open yet. Okay. Because you got to understand, price does have a tendency to run from one side of the overnight open through the other side, then pull back and then run. You don't want to lose those trades. So I can't just say, oh, if we're within 50 ticks of the overnight open in oil, you don't want to take any trades. I can't say that because you're going to eliminate some great crossover pullbacks, gone trades. Okay. But what you need to recognize is if you're sitting in consolidation of the overnight open, you don't want to be trading that. So let's talk about, let's see, what did oil do today? I don't even know. Hold on here. Let me jump real fast because I'm running out of time here. What did oil take a trade today? Oh, oil had is this today? Oil lost 200 bucks today, supposedly. Where did it do that? Okay, see, same kind of garbage. It's coming off here's the overnight open. It took a long, got knocked out at even, and then I don't even know what it did here. Oh, it took another long, and it got knocked out for $200 loss. So oil had 2 trades minus 200 bucks. That was what the system says today. Is that it? I guess that is it. Interestingly enough, if you take oil for the last 5 days, it's made $1,680. I have it the setting of it for 7 days back, so that's 5 days of trading. It's made $1,680 based off just the settings with the losses that I'm hoping you guys are going to learn not to be taken anymore, and maybe I'll be able to program in to help us avoid. But anyways, so oil's actually done well lately. And well, let's see here. In the NQ, this is 7 days, $1,888. Today was a good day, 530 bucks. And then the last one I wanted to talk about, but I don't really have time, is GC. And what did I want to talk about with GC? Hold on here. Let me see if I can figure out what it is that I wanted to talk about with GC. Gold, that is. That's their gold. See, same little situation you have right here. You got your overnight open. Once price comes down there and just starts hanging out, you just need to call it a day. Doesn't matter if it's triggering and signaling or nothing. There's nothing there. But it did have once again, first thing this morning, it broke across the overnight open, broke across the 5-minute red line, pushed up, created pretty good push on that 60-minute. See this blue line that's following for 60-minute highs, that thing is, having that on my chart is like, oh my gosh, just makes so much of a difference because I don't have to keep looking to the left now. And so when it broke that 60-minute and did a perfect pullback to the 1-minute gold line, wham, $800. I mean, just like that. Then what did it do? It came back in, did a reset right here, rolled up, came down, another 1-minute gold line, wham, went to break even, knocked out. Honestly, the markets right now, because tomorrow is FOMC day, the markets right now just do not have that follow through. This trade right here, honestly, this trade right here just never really had a chance. There's just no push. There's just no push in the markets other than those initial pushes away from the overnight open and then the pullbacks after you've broken 60-minute highs. Because tomorrow's FOMC day, and it's very important that you recognize that tomorrow's FOMC day. Tomorrow may be a great day to do zero trading. These last few days have been rough because it is FOMC day tomorrow, and unfortunately, the Federal Reserve dictates way too much control over the results of our markets. Oil and gold for the last 5 days, 720 bucks. There's probably some trades in there you could have avoided for various reasons like consolidation and whatnot. But I showed you the ones to avoid in the NQ, which actually NQ has been very good at avoiding them itself. Oil, not so much. And I'm going to work on getting a gap like this gap right here between the overnight open and price so that we stay away from rotations back against it for each one of these instruments, that you can turn that setting on or turn it off, and it'll manage that distance for you so that you're not taking trades against those longer term moving averages and help improve your win rate. I'll talk to you guys later. Have a good day. Bye.